Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everyone. I am Jeff Barton, your voice in the mortgage industry, calling to you from Las Vegas, Nevada, where we're doing the show today. I appreciate everybody listening, who listens to the show on a regular basis and who also looks to us for information about mortgages, about what they need to do if they want to buy a house, if they want to refi a house. There's all kinds of equity in most properties around the country right now. If you are sitting on equity in your home and you have need for cash, cash out refis are plentiful, and they are for all kinds of borrowers. There is the non-QM borrower, the QM borrower, the hard money borrower. All of these can take advantage, all of these programs, all of these things within the scope of what we do in the lending business can be used for you if you need cash out refi. Now, why would you take cash out? Let's say you need money and you're older and you want to make sure that you have a cash reserve in the bank because, hey, look, so anything can happen, right? I mean, you could have a medical emergency, you need to travel, somebody in your family needs something, i.e. college education needs to get paid for. Good reason for you to have money in the bank, and so therefore the cash out refi. Now, because the rates are still so low, we have yet to go into the quantitative easing, the tapering that we've been talking about for weeks on the show, for months, actually for years, because in 2008, as everybody knows, we went into what they called QE, quantitative easing. They're calling it, what are they calling it now? Stimulus package, but it's all the same thing. The Fed prints money through the Treasury and floods the market with cheap dollars, and those cheap dollars are then lent out in the mortgage marketplace to people in our community who take advantage of that, and those type of things are reflected in the rates, and the rates are artificially held down because there's so much money out there and because there's really no supply demand that there would be in normal circumstance in a normal market. So as that is happening, what we will see when taper does happen is the rates will rise naturally, right? Now, we've been in a war with the pundits on television. If you get outside the Beltway, which is the vernacular for use when they talk about Washington, D.C., anything outside that, corridor around the Capitol, around Washington, D.C., people in Main Street are affected very, very much by rates. Inside the Beltway, what they talk about is inflation, how that's hurting America, and they always have somebody come on who talks about how they're being hurt because they have to pay another X amount of dollars at either the food or the gas and this is all true. This is not like it's made up. However, if we're talking about why that's happening, it's not blamed on a particular person or a particular party. What happens is during a worldwide shutdown, which is what we had with COVID. Now, we've been through this before in wars, but very, very rarely do we get a situation which is a health crisis, which required, as it did this time, shutting down the world economy. Imagine that, shutting down the world economy. So in order to restart that, to jumpstart that, and to ease the pain of people to basically get through the day-to-day life, that's why the Fed made the money cheap. The money being cheap causes the inflation because there's a lot of dollars out there, and as things become scarce, those products which you want to buy with all this extra money cost more. So therefore, that's what inflation is. Now, some things that are good when we refer to inflation are wages. If you're working a $7.50 an hour job, and there are a lot of them in America, and we talk about how jobs in America, let's say the service sector has been hurt and somebody can't get their room cleaned at a hotel, or there are a number of these types of jobs, right? Low wage scales jobs. And what happens with those type of people is when they are needed, wages rise. When wages rise, that's called inflation because it costs the company, the restaurant, whatever it is, the food delivery service, the supermarket, it costs them more money for the labor in order to do the job. It used to cost $7.50 an hour. Maybe now it costs $10 an hour, or maybe even $15 an hour. And by the way, $15 an hour times 40 hours a week, times 52 weeks a year is $30,000. There is nobody in the US can live on $30,000 a year and raise a family. You just can't do it. So you need a two-income household, and maybe that's 60, and maybe you can get by in certain areas where the rents are cheaper, but not in most places. So when we talk about inflation, when we talk about why inflation, when we talk about where the blame lies, there is no blame. This is how the government or the Fed has determined that the economy in the US needs the type of stimulus, money, cheap money, in order to maintain the broadest spectrum of health in the economy. That's why we have inflation today. Too often, we point fingers and want to blame somebody in the immediacy of the moment. But nobody was complaining when we first passed the first stimulus package a year ago, a year and a half ago, because people were hurting and scared and didn't know where the next paycheck was coming for millions of Americans. That's still the case for many Americans. Now, as we exit this particular economic pattern, and as the Fed begins to raise rates, i.e., they stop buying mortgage-backed securities, they stop buying treasuries slowly, and they're going to do it slowly, and it's going to take them maybe a year in order to be able to fully eliminate the bond buying and the mortgage-backed security buying. All of that is a good thing because it will return the mortgage market, the rates that have been artificially held down by the Fed because they've made money cheap, to a more regular, normal pattern where we will get really supply and demand affecting rates way more. And then we look at indices like the 10-year Treasury. The 10-year Treasury, we always talk about it on the show because that is an indicator of where the money is heading. If the treasuries go up, if the 10-year Treasury goes up, usually that means that mortgage interest rates will go up. You can't take everything to the bank, but that's an excellent indicator. And as you can watch that and see where it happens and see the long-term trends, go to any trading app that you may have heard of. There's certainly Charles Schwab, there's TD Waterhouse, there's a million of them out there. You can see, if you just call it up, treasuries over the last 6 months, over the last 6 years, and you can see a trend line in what's happening. And you will see the corresponding rate rise and fall as what's happening with the 10-year. So that's an important indicator for you. Let's talk about rates, what they are today, just so that you have an idea of where we're going and where we're heading, and why, as I said, what we've done with the Fed in order to keep money cheap has been good for the economy and good for Main Street as well as Wall Street, no question. But trying to blame people as the cause for something when this is a worldwide event, the US is way better off than 99% of the countries out there. Look around and see exactly what's happening in Europe, in the Far East, in China, in Japan. Look what's happening down in Australia. Some countries are so hurt by COVID that their entire country is shut down again. And this is what the Delta variant has done. Vaccine rates, all of that is an important tool by which we can return the economy to a less inflationary stance. I know this is a grin and bear it moment, and it's terrible to be able to, have to say that this is going to continue for some time, the inflation, because the cheap money is still going to be around and the scarcity of products is still going to be around. Okay, I'm sorry, I digress. Rates, 2.93 for the 30-year, 2.37 for the 15, 2.57 for the FHA, 3.05 for jumbo, and 2.6 for the 5-1 ARM. The 10-year, as we've just been speaking about, is 1.3022, and it has been hovering in that range from 1.13, 1.03, all the way up to 1.5 points, right, for the last 4 months. It's been that way. We've been, taper, no taper. Well, we definitely are going to get taper. Although every time we talk about it like a definite, it's going to happen tomorrow, we get economic news that says, oh, maybe we need more stimulus. Again, Stop listening to that. We will return to a more normal stance. Within 18 months, we will probably have no quantitative easing or the stimulus packages anymore from the Fed, which is a good thing because we will return to a more normal market. And in that case, we'll also eliminate a lot of the inflation worries. The Fed originally, back when Paul Volcker stepped in, and this is going back 40 years, maybe longer, the main thing that the Fed was doing at that time was to curb and stop inflation. Darryl, are we okay?
Yeah.
Okay, excellent. Are we up against the clock here?
Yeah, about a minute.
Okay, about a minute. Okay, very good. We are, as I said, in Las Vegas, Nevada. I wanted to get to a couple of things about what's going on in the cities around America. I've had a world tour, so to speak, in the last 7 weeks. I've been to several different places. I wanted to comment on that anyway. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Go.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show this week. Each week, every week, we try to bring you information about mortgages, about how you can help yourself with a purchase or a refinance, things that you actually need as opposed to me pitching products to you. We bring to you guests each and every week as well, experts in the field with which we talk about, so that you're able to, make some good decisions based on excellent information. We try not to pitch. We try to, help out, teach, mentor, all these good things that are out there in the world. As I know, many of you are still struggling with either COVID in your family or is somebody in your household, as well as jobs and the economy. We usually talk about the effects of both the rates as well as the effect of supply and demand on a general aspect, but also how the Fed is affecting you because of the taper. We talked about that in the first section of the show. However, we have a great guest here today. He is Oscar Carboni, who is a trader by day and also a teacher by night. Do you do both day and night, Oscar?
Yes, actually, trading is 24 hours a day, and so is education, because none of us will ever learn as much as we need to know in this business. We just keep learning every day.
Excellent. Now, Oscar is an expert, but he also helped star in a reality show that we've talked about on the show several times that I've been developing, and he was kind enough to join us here today on this show. I asked him yesterday about Bitcoin, and he was telling me some interesting things, but also about cryptocurrency, about tokenization. And I wanted to have him give you a quick explanation as to exactly how blockchain works, what mining really is, because on this show, we've talked about it many times and trying to nail down the best definition so that you out there can really understand, especially if you're into trading it. Oscar?
So you're asking me to explain blockchain?
A little bit, yeah.
What mining is. So I'll try to keep it simple, layman's terms. Blockchain, picture literally a line that blocks come together, and when they come together, they make a chain, and you can't break the chain. So what that line really is if I'm going to buy Bitcoin and you're going to sell Bitcoin, those two trades are going to come together. And they're going to be in that blockchain. And once they come together, they are proven to be correct and exact. And you've got enough Bitcoin to buy, you've got enough Bitcoin to sell, and the transaction will take place. The mining is literally calculating the mathematical equation that will then connect those two trades and make them one, and make the blockchain trade connected. So what happens when the miners, I know it sounds confusing, they've got computers, really fast calculations, quick. They come up with the code that they generate a code that then makes the blockchain transaction go together. And that's what mining is. And what you do when you're mining is every time you make a transaction go together, if it's in Bitcoin, you get a free piece of Bitcoin. If it's in Ethereum, the miner gets a free piece of Ethereum. The more you mine, the more free cryptocurrency you're getting. That's literally pulling money out of the thin air but there is a cost to mining electricity. So the cost of mining Bitcoin, the electrical costs are almost as much as the Bitcoin is worth. At some point, if you try to put together a huge conglomeration of machines that are mining for Bitcoin. But there are other methods today that mining costs about as much as a light bulb, and you can mine your own cryptos and pull them out of the thin air. Helium is one of those cryptos that you can actually mine with a little device you can plug in your window. And what will happen is when someone in the world tries to do a transaction on the blockchain, if it's close enough to your little transmitter, it'll grab that transaction and it'll actually start to calculate, which is mining. And boom, as soon as it comes up with that, you'll get a piece of that coin, whether it's Ethereum, Bitcoin, helium. So mining is a fantastic thing if it's cost effective. Now, the one thing that we do have trouble with is the time frame of mining. When I want to do a trade, if I'm going to transact right now in the markets, I go filled. I just tap a few keys, my order is filled, the transaction takes place, and it's booked. Blockchain, because the computers are going through those calculations till they come up with that final code, takes time. And that's where we're having trouble right now. You could never take the stock market and drop it onto blockchain yet because the calculations take too long to go through. Once we figure out how to speed those up without too much cost of electricity, I think blockchain will take over almost every industry, everywhere. It'll take over real estate brokers. There's no need for exchanges. You can get rid of almost anything where there's a middleman that makes money on both sides, because the transaction that gets done on blockchain is absolute and proven to be correct. So no one is robbing anybody during a blockchain transaction. It's going to be real and legal. So I think that is the future, but right now it's a little bit slow to count on.
Okay, excellent explanation. I do appreciate that, because there's so much, with people my age, okay, I'm an older person. Younger people like it because it looks to be an easy way to make money. You ride up Bitcoin, you buy it at low, you try to ride it to the high. What are the dangers in, not Bitcoin, but cryptocurrency, in trading it or buying it and selling? Do you see dangers, or do you see it as something that you really can make some cash on?
So, okay, we'll talk about both sides. Are there dangers? Absolutely, positively. Here are some of the simple ones. If you've got Bitcoin or any cryptocurrency and it's sitting in a wallet, a digital wallet on your phone, it's
right.
a little bit safe, a little bit more safer than if you're doing something like this. Many of these cryptocurrencies now offer, if you buy our crypto, we'll give you 9% interest return on that crypto. But what they're doing actually is using that crypto and lending it out. And if there's a hack of that system, there's no FDIC insurance, there's no anything. The crypto is just gone. And there's no one that's going to give it back. There's no one even to call.
Right.
Crypto's just gone. So that's one of the things that can go wrong. Another thing that is happening now is, if anyone remembers penny stocks and the way these things that were called teenies used to make penny stocks rally up and come back down, penny stocks were mostly fake things, not fake companies, but they were mostly groups of people who purchased the stock first or issued it to themselves, went public, and then pumped that stock up a little till we saw a volume spike and we went and bought it. The insiders would get out and we'd be stuck with a useless stock. Now, those were penny stocks. What's happening today in crypto is, if you step away from the top 5 cryptos that trade, you're literally working with penny stocks, except for they're called tokens. So you personally, Jeff, if you wanted to come up with a token right now, you could, and you could give it a price, and you know it's worthless, right? But you can convince me to buy it. And as soon as I get enough people to buy it, you sell it to us and you walk away with all the money. That's happening with 90% of the crypto coins out there. So I will tell you this, there is serious risk in trading any of the smaller type cryptos. Stay with Bitcoin, Ethereum. Once you want to go past that, I kid you not, maybe Cardano coin, maybe not. I think you stay with Ethereum and Bitcoin, you're in a safer zone. Now let's take the good side. Now we got some risk in there. Now let me show you what's great about it. I did an experiment 5 years ago. I put X amount of dollars on a property, real estate, and I put 1/3 of that, 1/5 of that price into Bitcoin, literally. The property went up 2 times in value in 5 years. The Bitcoin went up 5.5 times in value. There's a lot of good money to be made in crypto. What you can't do is you cannot day trade the crypto. Buy it, hold it, wait for a big run, take your profits, and then do it again on the next drop.
Oscar, we're up against a clock right here, but I wanted to give you an opportunity to shout out your phone number, a way by which other people who want to learn more about what you're doing, as well as we didn't even talk about the school you have for investors. Could you give people a way by which you can be contacted?
Sure. You can reach me phone-wise, 702-629-4755. That's my Vegas number. But easier than that, I'm literally sitting right now in a live trading room with a camera facing me and a microphone. That is free to the public. No credit cards are required. And that you can find at livewithoscar.com. Simply join the site, free membership, and find me in the trading room, which is just basically chat live with Oscar. livewithoscar.com, chat live with Oscar.
Oscar, thank you very much for coming on the show. We'll do it again, and hopefully we'll see you around the block on the game show as well.
Jeff, thank you for having me. Yesterday, I had a blast with you. You're a great promoter. And today, love this as well. Thank you so much.
Thank you very much. That's Oscar Carboni. I'm Jeff Barton for The Mortgage Voice. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. Thanks very much for listening each and every week. We try to bring some information to you that's helpful if you're going to buy a house, if you want to sell a house, you want to refinance. There's tons of equity in most properties right now. We've seen a run up of 20% over the last 2 years. So it's pretty amazing. If you own a home or if you have a mortgage in a home, you've probably seen your ability to get rid of that PMI if in fact you've been under 20% for your down payment, or you've been able to take money out. You know, there's always a need for a rainy day fund in the bank. We've seen savings rates during COVID, just an incredible amount of money, about $1.5 trillion in savings that we're trying to tap into in order to get the economy moving as fast as we can. However, let's shift a little bit to what we're doing locally. I'm in Las Vegas, Nevada, as I told you earlier in the show. We've been doing a world tour. We've been in a number of different cities. One of the things that I've noticed in Las Vegas that I did not notice in some of the other cities is the entrepreneurial spirit here. There seems to has not died, has really increased. Walked around the city a little bit, way off the strip, and I just see pockets of businesses booming all over the place. One of the people that I wanted to bring on the show today has also been entrepreneurial in several aspects. She's currently involved both with property management as well as some other aspects of social media, and acting as a host yesterday for a new show that we've got coming out. And this is Joanne Munns. Joanne, how are you?
Great. How are you, Jeff?
I'm fine. Thank you very much. Again, thank you for yesterday. You did an awesome job. Really appreciate it.
Oh, my goodness. I was going to say, this is kind of role reversal.
Yes, it is. Yes, it is. I'm very comfortable in being in charge of the things on radio, and having you as a guest makes it even easier. So thank you.
Thank you for having me. I'll see what information I can give.
Okay, so one of the first aspect is you deal in property management, and I wanted to touch on this briefly because we've heard so much about the difficulties of people trying to pay rent, people not being able to pay rent, and of course we've been in forbearance for mortgages for years. In where you are doing your property management, have we seen the moratorium on forbearance ended? Are you now able to evict? How is that working? What part of that job is easy or not easy?
Yes, we are able to evict now. The moratorium has been lifted. Property management is kind of like the ugly stepchild in real estate. Nobody talks about it. You don't make the big sexy money of sales, but it's a consistent paycheck. But with a sale, it's a one and done deal. You know, person buys and you're gone. With property management, you secure that tenant, you deal with that tenancy, and then the post tenancy you have to deal with as well. Now, while they're a tenant, you're dealing with, rent and HOA issues, property issues, all of these things. So there's a lot of moving parts. And the life of a property manager is not very long because
Right.
you'll pull your hair out.
Now,
But
go on. I'm sorry, I interrupted you.
But as far as like the tenants not paying rent, that was very interesting. Our company, fortunately, didn't have as many as we had anticipated. There are some people who stepped up and made payment arrangements during COVID and said, I can't pay the full amount, I'll pay this. So you actually saw that the tenants really cared, but there were a lot of property owners citywide and nationwide that really got spanked with COVID.
Right.
You know, they paid the mortgage, they had to upkeep the property, they were getting no money.
Right.
So COVID was great for the tenant, but not good for the landlord. And here in Nevada, we are very tenant friendly.
Right.
I'm sorry, landlord friendly, where others are more tenant friendly. So typically we can have somebody out within 2 weeks. You know, our eviction process is very quick. Is that more information than you needed?
No, I like all that information because I think when people hear that, the follow-up question to that is the individual property owner, which you touched on, the person who owns another house and is actually able to derive some, income from the property that they're renting out. And that's an important aspect of it. The problem with that, of course, is what happens when the people stop paying rent. And I think you answered that a little bit by saying, yeah, it's a difficult situation because those people still have to keep the property up. They still have to pay the mortgage, yet they're getting no income. There's a lot of people in California who don't like that arrangement, would much rather buy and rent here locally in this area. Does your company do individual sales for rental property, or is that more in a residential sales real estate company?
We do everything.
I see.
We do sales, but the bulk of our work does come through property management.
Okay, let's shift gears a little bit. Social media, how you attract an audience. That's and I see you smiling because I think a lot of us like the ability to be able to use the internet for things that will promote us, right? However that is, whatever that is. In your case, you do it as a way to show not only your humor, but your ability to be able to be a character and drive an audience based on that character and your sense of humor, which I really like. I like the way that it came out in your performance that you did on the show yesterday as well. Tell us how you came to that point, what made your strategy what it is, and how you keep that going.
It was an accident, honestly. My title lady said, you need to get on Instagram, it'll help your real estate business. Well, I started posting real estate stuff, nada. So then I shifted the focus to a different form of real estate, and things picked up a little bit. And then COVID hit. And the minute COVID hit, I said to myself, you know what? There's a lot of people that are going to be stressed out and scared. And, you know, when a pandemic hits, you don't tell people, go sit at home, we'll tell you when it's over. You know, you need to band together. So I started doing a video a day just to cheer people up, you know, something funny to do while we were quarantining, thinking it was only going to be 2 weeks. Well, and that kind of like showed my humor and other sides, you know, and it was entertaining, it was fun, it was refreshing. And that did lead to some opportunities. I got to meet, you know, Mario and Gino, and other people who have given me little opportunities. So I'm just hoping for my big break.
Well, and for people that don't know, Mario and Gino are people who are producers in the film world, as well as they do a lot of work for television as well as commercials. And that part of the business, through what you do online with your sense of humor and how you communicate what you want to communicate, is inventive, and it's a creative element of you, which I think is the most enjoyable part. I'm guessing, but I think that's probably what it is.
It is. I am way creative, and I have an oversized funny bone. So to be able to combine the two and share that, I get a
Right.
lot of feedback, not only on the real estate aspect, but on the humor. So
Right.
it's a great outlet for me.
Now, when you were doing the video a day, did you find that after a while it got difficult to do, because it's hard to come up with something every day, especially online? And I noticed the TikTokers or the Instagrammers who do that, it's an amazing amount of work, even 1 minute one.
It was a lot of work, and
Yeah.
fortunately, I would ask for ideas, and people would send in ideas. Or like one day I got in my car, and in the middle of summer, a Christmas song was playing. So I'm like, oh, that's what we need. Christmas is a happy time. I'll do a Christmas video. I don't care that it's June. So there was something that came along. I love cooking. Cooking is one of my passions. So there were a lot of apron ones and a lot of food, things you could do at home. So it just kind of, it worked. It was a struggle, yes, but it worked out.
Joanne, listen, we're up against the clock right now. I really appreciate you coming on the show. Could you give people a way by which they can contact you or get in touch with you, especially if they need both your creative spirit as well as some real estate services out here in Las Vegas?
Yes, would you like me to just tell them now?
Sure.
Okay, I'm Real Estate Barbie on Instagram, and that's real with REEL. Or if you are looking for real estate with Brady Realty Group, 702-610-7398. Thank you, Jeff.
Thank you very much. It's Joanne Munns, and a terrific realtor as well as personality online. Thanks very much for coming on the show.
Thanks. Have a great day.
And you too. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. Each and every week, we bring to you guests. We bring to you information. Look, it is end of summer, right? It's 2021. There's lots going on in the world that you can get distracted, easily distracted. Maybe you have kids, then you got to get back to school. Maybe you're trying to, change jobs. Maybe you've got sick family members. Sure, certainly enough of what's going on out there. One of the things you don't have to worry about is if you listen to this show each and every week, we try to bring to you solutions about what's going on in the real estate market. I try to explain what's going on and why things are the way they are, and to stop pointing fingers at somebody who's the problem and figure out that there are tons of things that you can do in right now to improve your situation. And some of the things in the mortgage industry that we try to do is to bring you programs, professionals, different ways to look at a problem and maybe even enjoy a little bit of your life. And all these things are important because, look, if you've got stresses on your finances, but you own a home, the last 2 years you've seen your home increase in value by 20%. Maybe you need to take some of that money out, put it in the bank for safekeeping so that you feel better about yourself if somebody gets sick, if you need a big bill paid, all kinds of different information. Anyway, with solutions, once again, to the show, Charles Giscombe from Malibu Funding, Nevada. Charles, how are you?
I'm outstanding. How you doing today, Jeff?
I'm not too bad, man. I got through that opening. Really appreciate that.
You did amazing, my friend. You did amazing.
Okay, so entrepreneurial spirit. I walked around Las Vegas today and way off strip, right? And what I noticed was there were a lot of good businesses out there working. There was a vibrancy here that I didn't see in a couple of other cities that you and I have visited a couple of them. And
Correct.
I think that's great. One thing that we try to tell people is there's a loan for everybody. Don't feel as if you can't get a loan. Tell us about some of the loans that you're doing and how you're helping people who just, either say, hey, I can't get a loan because, I got bad FICO, or I just don't make enough money, or I don't want to show money on the books. How do we help these kind of people?
You know what, Jeff, we talk about this time and time again, and it's just amazing what this industry, what this market, and what has happened has created. We always talk about the non-QM loan. It allows everyone to be a participant in the industry right now, to take advantage of good interest rates and great opportunities. That non-QM loan, which stands for non-qualified mortgage, are loans that still do abide by TRID and RESPA, but there's others that don't abide by TRID and RESPA. And at the end of the day, it allows individuals who don't have the structure of a traditional loan to get into the market and allow them to qualify a loan. When you have the ability to repay, which is the ATR, which we say, you just have to be able to show it. These loans provide opportunities for individuals to take their bank statements, take any kind of documentation that will show that they have the ability to repay, and utilize that in the place of traditional structuring and paperwork and financing to get financed, I should say. And that's an amazing thing. And that's what we've been teaching, showing people and teaching entrepreneurs all over, that they can get in the market. They don't have to be frustrated, and there's loans out there for them.
Yeah, no, I agree with that. And I think that's the way you have to look at it. I think there's always an us versus them quality to many loans. Like there's somehow a fight between what I want and what you don't want to give me, as opposed to trying to work together to get the best solution for both you and the lender. The lender wants to lend money, right? But the
Correct.
borrower sometimes thinks that they're not trying to lend money, and there's an issue. So how do you get around that factor with your clients to make them understand that not only full disclosure of everything is the only way to do it, but it's the best way that they can get what they want?
Absolutely. A lot of the clients that we have now, they're different clients that utilize non-QM before, as in years past. The individuals that we first started doing non-QM loans with were individuals who were almost like last hope island, right? Like, this is my last hope to get a transaction, right? And that's how it used to start. It's like, this is my last hope. Charles, please save me. A lot of these individuals had decent credit. They just did not have that financial structure. Now, obviously, they get into a loan. It might be a little higher interest rate, or back then a higher interest rate. And you had to teach them, these are the things you're going to sacrifice if you don't have traditional paperwork. If you can't provide the 2 years of history of employment, if you can't provide your tax returns, if you can't provide paycheck stubs and the ability to show that you have the down payment and reserves, then guess what? Then you're out of luck. And now you come here and we give you a situation or a scenario that may be a larger down payment and a higher interest rate. Now you cut to 2021 with non-QM. Now you have individuals who can provide that documentation, but Jeff, quite frankly, just don't want to provide how much money that they're making because they don't want to give it away. They're saying, I'm taking advantage of the tax structures and the benefits. I want to utilize this type of loan because it sits best with me and my structure and my financial livelihood. And so that, therefore, it's changed. I just teach every single individual. You tell me what you're comfortable with. Let me know what your structure is comfortable with. Let me know the importance. Is it rate? Is it term? Or is it just a check that you stroke every month for your mortgage? Once we understand that you're like a lot of people and not like this is the last resort loan, now these individuals today are saying this is a strategic financial decision I'm making to get a loan done and to get many of them done with the least amount of resistance. Okay. And so that's why we just earn as we learn and we teach them. No longer am I, I'm desperate. Now it's like, hey, listen, I want to get this type of loan done because I want to get this many properties. I want to do it this way. It's a great learning situation to see people that we had in the past, Jeff, that started out that way, that are now telling me how to structure the loan because they know now what to do.
Yeah, I think the non-QM, we look at it differently, and we're going to look at it differently in the future because the market, as you well know, changes. Yes. And when we get what we've been describing for the last 6 months as this quantitative easing, when that starts to taper off and everybody is worried about the taper tantrum, right? And then the markets will go crazy and rates will spike. Well, rates are going to go up. And these types of loans are going to be more attractive to a larger and larger pool of borrowers. And as you said, not the type of borrower that's like, oh my God, these people are the worst risk ever. I'm going to lose all my money as an investor. It's not that type of loan.
Not at all, Jeff, because now So now the investors that take on non-QM loans have created a comfort level, not only for the market, but for themselves to say, we can take more of a risk. We can increase the loan to value that we give people. We
Right.
can lessen the down payment. We can take the FICO score requirement down, right? And more importantly, we can now take advantage of the interest rates that this market has created and take our rates down because we're still making money, because now 25% of the loans in the industry are now non-QM loans being
Right.
done. So now the comfort level for investors is now everybody wants to jump in now. I'll take this loan.
Right.
And we all know what's happening on the horizon, which are going to make non-QM loans right in the same bracket as a traditional loan. And when that happens, well, Jeff, the beautiful all hell will break out, right? And so that's what everybody's waiting for. And also, you no longer can say I got a high interest rate loan, especially when the rates go up. The non-QM market is going to be right on the same level and playing field as a traditional loan.
Well, usually when we price out non-QM loans, that's what people worry about. They think hard money, and it's not hard money. It's a completely different type of loan. It's securitized. Usually these types of non-QM loans have great credit scores from their borrowers. A lot
Absolutely.
of the issues that we used to deal with, what they used to call subprime, don't exist in this market everywhere.
No.
Because the CFPB, the state regulators, they've eliminated the front end issues with, straw buyers, let's say, or other types of things that don't work.
Correct. And you think about it, at the end of the day, they're taking a risk saying, I'm going to allow you, I'm going to provide financing for you. All I need you to show me is that you have the ability to repay, which we talk about, the willingness to have skin in the game.
Right.
And for that, we will give you really good interest rates. People think about hard money loans and 10%, 11%, 12%. Then you get down to 8 and 7%. You have non-QM loans, Jeff, that are 3.625, 3.25. That's come such a far cry away.
Right.
I am amazed and happy to sit down and talk to people to show them another option. And then more importantly, for the check strokers of the world that are concerned about that check, when you say, hey, I'll give you a 4%, you can go get a 3.25 or a 2.875 on a traditional loan, but guess what? You got no MI at 90% LTV. Well, guess what? The check stroker goes, well, hell, I'm taking that deal if I don't got MI because that brings me down. That takes my
we're up against it. I got to go. And I really appreciate you coming back to the show. As always, great information for people who need our type of loans and your type of service. Let people know how they can get in touch with you as well.
Absolutely, Jeff. You can reach me at 702-328-5191. Again, 702-328-5191. And you can email me at charles@malibufunding.biz. That's charles@malibufunding.boy Isaac Zenith.
Charles Giscombe, thank you very much. Appreciate you coming on the show. And we'll catch up with you soon.
Talk to you soon, Jeff. Thanks for having me, buddy.
Thank you very much. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. Thanks very much for listening. Each and every week, we bring to you information about loans, about the economy, about some other aspects of what's going on in our lives, hopefully parallel what's going on in your lives, or at least give you an example of what you can or can't do, or what you should and shouldn't avoid. Thanks very much. We are on 5 stations in 3 different states, from Albuquerque all the way up to Lake Tahoe. And Daryl, how's it going up there at Lake Tahoe? The fires finally go out?
It's getting better. The fires have diminished, and people are starting to move back in and take up space.
Okay, that's excellent. That's good news. We talk about fire-related issues with lenders. If you were in a particular loan in areas that were affected certainly by fires here in the West, California, Northern California specifically, but there has been hurricane after hurricane after hurricane in certain areas that we lend, and certainly other areas, whether it's Louisiana, Texas, all the way up through the Appalachians to New England, we've seen flooding and all kinds of things that would disrupt any funding that a lender would do. There have been alerts that have gone out in the last, I don't know, 3-4 months, saying that they're not going to lend until somebody goes out and inspects the property. And you can understand that. However, if you're one of these borrowers who are in a purchase right now and your loan is being held up, how are you handling it? What are you doing about it? And what can you do about it? Some of the information that we've given out earlier in shows prior to today's, but I'll just go through 4 or 5 different items that you can do. First thing you have to do is call your lender and get the exact nature of what they need in order to be able to fund your loan. Now, I know most borrowers work with either a broker or a bank or an intermediary. They're not actually talking to the people lending you the money. You're talking to somebody who talks to the people who are lending you the money. You need to get a very clear, concise answer as to what is the criteria to lend on a property that is, in a hurricane zone or in a flood zone or in a fire zone or on, all these things above. Okay, that's one of the things you can do. Another thing you can do is contact the seller of the property that you're buying and letting them know that you are in a rough situation. They're also in a rough situation because obviously they don't want to be in a property, or they don't want to obviously have a sale held up because something going on weather-wise that they can't control. But if you are in touch with the seller or your agent with their agent, however you're doing it, making sure that everybody is on the same page about what's happening with the property, what's happening with the loan, what are the timeframes involved here, and what has to be done in order to close the property. Communication is the key, because if you communicate well, or if you continually try to open up and let them know what's happening, either on the seller side or from the lender side, it's really going to help you relieve some of the stress and obviously give you the time you need to be able to close the loan. The other thing is some of the documentation within the loan itself is time sensitive. So if there's a week or 2-week delay, because there has to be an inspector to go out and re-inspect the home, make sure it's not underwater, make sure it's not burned down. All of these things are very legitimate from an investor. Can you imagine lending somebody money which you don't know the condition of the house? Of course you wouldn't do that. So it's very, very understandable. However, the time frame to get somebody out there, especially this summer, has been really difficult to try to get appraisals done anyway, just because of the demand. But now, because we have these incurred expenses through the loan process in order to fund the loan prior to getting approval, after getting approval, after getting doc signed, it's difficult to be able to wind your way through that particular maze of stuff you have to do with the appraisal. So how long is it going to take? Do you have to update your documents, the documents that are time sensitive within your particular loan? For instance, some loans at the end of the month need to be redone, redrawn, and re-signed if it goes past a certain date. Make sure you know what that date is, and make sure you tell the seller exactly what those dates are, just so that, again, everybody is on the same page. Stress is a killer. It will make you do things that you don't want to do, especially if you are afraid. Don't be afraid. You're the buyer. The seller wants to sell. So you are in the catbird seat. Nobody is going to be able to close on a property in any of these weather zones, whether it be fire or floods. So the chances of somebody else stepping in and buying that property out from under you because you can't close because the appraisal is going to take 2 more weeks because of the flood conditions, don't concern yourself with that. The reason being is that nobody's going to be able to get it done. So the seller wants to stay with you, but you are in a good position as the buyer because you're under contract, and anybody who obviously is looking at the situation should be able to see that an extension is needed. And if more paperwork, or the paperwork that you have to update, needs to get done, payoff demand, for instance, that is what's going to be needed to close the loan. Calm is better. Calm is better. Also, the fourth thing, and this is more towards you, the buyer, the fire insurance that you have, or the flood insurance that you have on the house, you want to make sure that the policy is that you're getting is obviously going to cover exactly. And like most people, when they get insurance, especially if it's beautiful the day they saw the house and they don't see any potential for fire or floods or other natural disasters, whether it be earthquake or hurricanes or whatever, you say, okay, it's fine. And you try to get the least expensive insurance. Sometimes that's to your detriment. Make sure that you go through the limits with your insurance agent so that you are very well aware of what the costs are when and if, and hopefully never, but if it does happen, the worst case scenario, are you covered and what are the specifics? Go through your insurance policies. It's really important. We go through them once a year with our insurance agent. It's the most boring and I guess, time-consuming thing that we do once a year. However, when we did have a fire in our area, we were extremely happy that we did those things and that we continued to update insurance when needed. Because when the fire swept through our area, our house did not burn, but what happened is a lot of the things around the house burned. So we had power lines, what else? Irrigation lines. We had all kinds of things with the house itself. All of the plastic tubing that went to our solar, all of these things burned. So we needed to not only inspect them, but to replace them. And because we had had an extended policy discussion with our insurance agency, our insurance agent, we were able to get reimbursed pretty readily, and it wasn't such a big deal. Several things I wanted to talk about. Okay, I've been on a world tour of cities, so to speak. Now, if you're in this listening area, there are many cities within our radio scope, but there are a lot of countrysides too. And even though I want to talk about cities, most of what we talk about in the cities isn't necessarily the glitz and the tall buildings. It's where people live. How are they buying and selling homes? How are they financing homes within the scope of a major city? But it still reflects what we need to do, not only in areas of high density living, but also in rural areas where the density is a lot less. So cities, Los Angeles. I live in Los Angeles, so I know very much about what goes on in the city. Most cities, this city in particular, Los Angeles, where I live, is high density. There are a lot of houses within a very small area. The largest county in the country is Los Angeles County, over 10 million people that live there. Now that may seem a lot, but the most important thing that I've noticed in Los Angeles is the city remained vibrant, has remained vibrant throughout the pandemic. Now, why is that? Because the city probably has a lot of people that continue to need to work, continue to need to get out there and earn a living in order to pay for what they have and what they need. That's Los Angeles. Detroit. I went to Detroit about 6 weeks ago, and I went into that city. I'd never been there before. And one thing I noticed about that city is that it was not vibrant, that there was a lack of movement of people and cars and commerce within the scope of the city that I walked around. Now, Detroit is a small city. It is not a large city. There are many small cities in America of 500,000-600,000 people, Detroit being one of them. I think some of the economic opportunity that has missed Detroit is based on the auto industry and what's going on there, but also some of the industries that are trying to rebuild that city. Concentrating on the people there is the most important thing, and I'm not sure that that's happening, which is why I don't think I saw the vibrancy that I saw in Los Angeles. Fourth city, Denver. I went to Denver last weekend. I drove around the city. I walked around the city. Another city that is not vibrant. It was, unless it's football day or unless the Rockies are playing, I didn't see any actual movement in the downtown area of cars, of people, of commerce. It was surprising to me because it's an actually absolutely beautiful city, a lot of brand new buildings. But in walking and running the outskirts of the city, which I did, go mile, 2 mile, 5 miles out, you will see a lot of older homes that needed repair. It looked as if there was a lot of employment issues just because there weren't people out. Now, much of this is blamed on COVID. Most people staying inside, not repairing or not being able to work and spend money on their homes or their neighborhoods. I don't think it's that. I think it's more the other, that the vibrancy and the nature of the city has lent itself to not be that type of city that I saw in Los Angeles. The fourth city, Las Vegas, Nevada. Now, Las Vegas, Nevada is one of those places. I said in an earlier section of the show, an earlier segment, what I see in Las Vegas is I walk down some, what you would consider desolate streets. But on those streets, what I saw were businesses, lots of businesses open, commerce, people driving around, walking on the street. Now, Las Vegas is not a city outside of the strip that you see people walking around. I did in Las Vegas, and I did this particular trip. I was amazed at the ability of businesses not only to remain open, but to continue to look like they've thrived in a street that looked like it, could have had a bomb go off. Anyway, that's my description of what goes on in my 4-city tour that I did. I'm Jeff Barton, your voice in the mortgage industry. I really appreciate you listening to the show, and we'll see you next time.
To the Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.